Alright, good morning. Today is Thursday, August 22nd. And let's see, what I'm looking at right here is the E-Mini S&P 500 futures market. This is a daily chart. And what I've done here is I've measured from this low, right, this pullback, roughly, what, about 7.5% pullback of the overall market down to this low, which occurred back in June, right? Market ran up, broke the all-time highs here, so I've measured from this low to high, and again, the way you do it in TradeStation, or really any software charting package, all software charting packages have the Fibonacci retracement tool, so you click on it. And let me take this off and show you exactly how to do it for those of you that do not use it regularly. Click on it, put it on the low for support, right? Move it up to the high, unclick, left click. And what you see here is, look at, we are 38.2% right in here, and the 50% retracement of that up move, right here. So, like I said 2 days ago, what I'm looking for, really in this area where I'm drawing the box, I am looking for support to come into play, okay? I am looking for any reason to be looking to buy this market long. So again, this swing here, this low right down in here, up to this high, we've got the 38.2 right in here and the 50 right in here. We've got the 50 exponential moving average, the hot pink, and then the 200 right in here. So we're also trading right between the 50 and the 200. And since the market has started breaking down through the 50, want to be just a little cautious in here, but we're still trading above that 200. All right, and we've got the fibs, the 38 and the 50 sitting here. So I'm really looking for a price pattern before really entering this market. There's nothing at all wrong with getting in a small position in here, because I really do think we are going to get a bounce. So let me flip over to an intraday chart to see if we're getting a setup here. On an intraday 3-minute chart, here we go. This, look at this, is textbook. This is a textbook day trade. Market opened up lower, rallied up the first 12 minutes. Look at these, the first 4 red bars, traded up through that 50 exponential on a 3-minute chart, and then immediately up to the 200 on an exponential, ran up to this point, okay, started consolidating. We had many bars through that 200 moving average where the actual low was above the 200. You know, I like to see, 3 to 4 consecutive bars where the lows are not even able to touch that 200. So that's a successful penetration when you see that. When you see at least 3 to 4 consecutive price bars where the low of each bar is above that upper 200 exponential moving average. When you get that, you can buy that market either on a little dip or a breakout through the high that actually took the market higher, which is right here. So we got the penetration up right here. The market penetrated up through these original highs once we broke up through this level. And then immediately, look at this, and I love this, we immediately pull back to that 200 exponential moving average. Okay, that is an automatic buy in my eyes. That's a great trade. And look at that, the market pulled back precisely to that 200 exponential moving average, which was sitting at 1647 and a quarter. Also, if you were to measure your fibs from the low, look at that, to that high before that pullback, take a look at this, folks. The market came back precisely to that 38.2% retracement of the low of the day up to that high when we got that rally and rallied up through the 50 and the 200. So we were looking for that pullback to that. So since it did make a new high here, it made a new high here, we're going to measure again from the low to that high. And this is just a great one of the tools that are in my toolbox that I use on a daily basis to day trade this market. So again, measured from this low up to this high. First, you made these 2 highs. We consolidated. We wanted to see a break up through these highs. We did. We broke up right here to this new high. You either buy it automatically as it penetrates up through those highs with an initial catastrophe stop loss below that 50 exponential moving average, that would be your initial stop loss if you were to buy it automatically on a penetration up through the high. Okay. Also, if so that'd be more aggressive if you bought it up through the high. If you waited for the pullback, which I did, came down at that 200, that's an automatic buy. Your initial stop loss is going to be at the same place. It's going to be below that 50 exponential moving average. So if you decide to buy it on a breakout, obviously your initial stop loss is going to be much larger than if you were to patiently wait for a pullback right here. Now look at this trade. Either or, if you bought it through the high of 49.5 to 49.75, look at that. You've already got 51. All right. So you got 1.25 in this trade, easy. If you waited for the pullback, on the other hand, down to either 1647.5 to 47.25, you're up 3 points on this trade, patiently waiting for that pullback, and that's exactly what you got. Excuse me. So again, quickly outline this. Look at the 3-minute chart set up beautifully. Why? Again, the market opened up, immediately ran up through that 50 exponential, then proceeded to move higher up through the 200 exponential moving average. All the while, take a look at the daily chart. On the daily chart, we're at critical support, right? We're trading between the 38 and the 50% retracement, right? Right in here, right? Trading between also the 50 exponential and the 200 exponential moving average. This area is a big support level. So on a daily chart, we're in support. And then flip it to the 3-minute chart, we actually had a trade set up based on that 3-minute chart. And look at this market continues to run higher. So a good little lesson that I believe that anybody watching this video can profit from, learn from. I suggest watching and observing this type of trade setup on a daily basis to see what you get. Again, what we did was saw this market open, immediately blew up through that 50 and that 200 exponential moving average, put in a high, had at least 3 to 4 consecutive bars where the lows were actually higher than the 200 exponential, right? Either wait for a pullback to that 200 exponential or wait for the penetration up through the high and then the pullback to that 200. And the market bounced like a charm. Textbook trade setup. All right, so again, hopefully you learned a little something from this trade. I will be back with you tomorrow. Have a profitable day. Bye for now.